So I have a ticker here that is up 33% on the month alone, and I think there's actually another 120% upside. We're going to get into that, but first, as always, you like to check out the indices because you should not be entering any swing trade unless you have an idea what the overall market is. You must always consider macroeconomic trends, interest rates, inflation, all of that, especially in today's day and age, right? Post-COVID. So right off the bat, I have the S&P 500. It is open on the monthly, and it's open on the monthly because the best thing to do with macroeconomic trends is zoom out, get the full picture. And with swing trading, you should always be zeroing in. You should be starting at your larger time frames and moving forward for a good entry point, right? So the S&P 500 right now is above all three moving averages on the Bjorgum EMA cloud, which is good for a long position. One of the things I really like about the Bjorgum cloud is not only does it show you whether or not you're above or below the simple moving averages, but based on the color, red or blue, it shows you strength of that current trend. Now, of course, you always want an overall directional moving average, something that's showing you a larger sort of time frame of bullish or bearish sentiment, right? So we are above the HA market bias indicator on the S&P 500. Pull up the Trendillo, which is an oscillator I like to use because it takes in price action, volume, all that kinds of stuff, along with buying and selling pressure, okay? So we are above the zero line, which is this line right here. It's dotted, gray dotted line. When you're above that zero line, it is considered to be bullish. So we are in bullish sentiment. And when it is above this blue line and in the green, it is considered to be at least slightly on the overbought side, okay? Now, it can run for a while, especially with the S&P 500, which I'll show you just one sec. But once you are below this zero line, you are considered to be in a downtrend. So we are considered to be an uptrend. So we are bullish, bullish, bullish. On the MACD, which I like to bring up from time to time, above the zero line with a green histogram with the blue MACD line over the yellow signal line, which is all bullish. So we are bullish, bullish, bullish on the monthly for the S&P 500. We can drill down to the weekly. You don't need to fully rehash everything there now that you got the bigger picture. We are still bullish right here. We do not have a resistance. We're in all-time highs on the S&P 500, which is something that is very beneficial for those who are going in a long position. We kind of we consolidated a little bit here at the previous highs. For the most part, we blasted through. So if there is a downturn significantly enough to where you can see it on the weekly, then you're going to be looking to see 478 as a floor. Okay, does that make sense? I hope it makes sense. All right, so everything bullish on the MACD and the Trendillo as well. We're going to go down to the daily. Now you can see a little bit of a divergence right here. I'm going to bring up a trend line. There is a divergence on the Trendillo right here, showing that we are becoming a little bit exhausted because we have a downtrend on the Trendillo, while you have, in that same time period that has gone back to November of 2023, you have upwards momentum, right? So this is a bearish divergence, signaling that sometime in the near future, you can expect a pullback. At this point, the S&P 500 has been ripping since the end of October of 2023, which is about 5 months now. And we're probably due for a pullback, but anything on the shorter time frame, right? Because we're on the daily. We're not seeing that with the Bjorgum cloud. We're still above the HA market bias indicator, and it is green, signaling that we still have a bullish continuation to the upside. The MACD, pull that up. you can kind of see that same bullish divergence right there, right? So we're not going to go to anything less than the daily in this video. You see 3 straight days if we zero in here. I'm sorry, 4 straight days where we ended just slightly lower than we were before. And we weren't able to actually break the open. So that is suggesting, maybe we'll just go down to hourly so I can show you. That is suggesting that we are in a little bit of a downtrend, which you can see right there. Now, if you notice on the hourly, we are approaching the HA market bias indicator. And so we could actually expect a bounce up. Now, when you get that bounce up, because as you can see, it does like to bounce off of the HA market bias indicator, it's going to bounce, and whether or not that bounce holds or falls completely straight through, obviously, eventually things do fall completely straight through. That is something that you just have to mitigate when that comes, right? So 2 perfect examples right here. If I zoom in, comes down, even falls below the HA market bias indicator, but comes back up, and that is actually just considered a bounce off of the HA market bias indicator because it doesn't come back and ever use it as a resistance, right? Versus something, even though it was very small, technically this bounce up and then a continuation to the downside is a rejection off of this HA market bias indicator, and that pulls the whole thing down whenever it does that. All right, now we are going to get to the ticker of the hour. First, we're going to go back to the monthly. Drum roll, please. It is SWBI, Smith & Wesson. As I said earlier, you always want to start with the monthly and zoom in from there, because if your monthly indicators are not showing bullish sentiment, you have to be very cautious if you want to go long. I understand why some people don't want to wait for the monthly to give all signals. You can snipe it on daily and weekly, but you have to understand that's higher risk, okay? So why do I like the Smith & Wesson? Well, zoom out for a second. We have very clear going all the way back to, 2001 was that .com bubble. So that was somewhat of a black swan. Nonetheless, we can take it from post 2001 bubble, and you have a pretty steady uptrend. There is support and resistance. Now, it's not perfect. Nothing is ever perfect. If it's perfect, you're probably using your imagination a little bit, but you have something like that, okay? Now, if you see right here, just this month, now it's not perfect. I wasn't going to get the wick in there, but it is up 33% if you add the wick. It just says 30% right there. So on this is the monthly chart, right? So this is just the monthly. That is one candle that I took. It was up 30% in 1 month, which is huge. We have, zoom in a little bit, make it easy for you. We have the candle above all of the moving averages, and we have what is very important here. I'm going to get rid of the price action so you can see it. We have the cloud turning blue, okay? So that is the beginning, potentially, of a new trend, a change in direction, okay? Now, after the Bjorgum, we like to look at the HA market bias indicator. Now, keep in mind, it hasn't had a lot of data. It has been on the chart since 2015, but in the grand scheme of things, it hasn't been around that long. Nonetheless, it actually has been a pretty effective indicator. You can see that as time goes on, indicators, as they collect data, become more and more accurate with situations like this where you don't have a ton, right? So we're above the HA market bias indicator. We are turning blue on the Bjorgum clouds. If we bring up the Trendillo, we are now above the 0 line, signaling bullish momentum. And if we bring up the MACD, zoom in, we just now are approaching. It might have hit it. It looks like it's exactly on the line, but it's heading towards the 0 line, suggesting that this is, by next month, by April, will be above the 0 line, which will be bullish. So let's see exactly where would be a good opportunity to enter. We're going to go down to the weekly chart. Now you can see, running it down real quick, zoom in once again, you can see that we are forming a blue cloud on the Bjorgum, but we have just not enough time on the weekly for the price action to be above the HA market bias indicator to turn it green. One of the reasons why the HA market bias indicator is so effective is because HA stands for Heikinashi, okay? So it is going to actually smooth things out. And just because the price action comes above that indicator does not mean that it's just going to turn green right away. And therefore, it's not going to react to just very little detail up for a second and then back below, right? It's going to stay red for a little bit, which is good because what oftentimes happens is, let me draw something for you. Something will come up, come back down, and then come back up to change momentum. So a lot of people, and it is perfectly okay, actually, in my opinion, to enter here. However, if you wait until the HA market bias indicator turns green, you're more likely to actually get in after a second bounce off, which is a better price point, okay? So we are going to hide these drawings for a second. Whoops, fix that. There we go. So if we drill down to the daily, we could probably see a little bit more accurately where that would be. Turn the auto on, and you can see it most likely would be where the HA market bias indicator is on the daily. And if we look at that, that is anywhere. Now we're going to give a range, okay? Because just because it doesn't hit 1346, which is what the bounce off of the daily would be, doesn't mean that it's not going to change momentum. It could fall below it. It could only come back down to this gap up right here at 1494. But we're going to give a range, and we're going to see how accurately that actually looks on the weekly. So we're going to give a range of now, because on the monthly and weekly charts, this setup has given a bullish signal and a buy signal. So we're going to give it a range of right now to, let's see, I had to get the right drawing up real quick. So we're going to give it a range of bottom being 1320, top being 1765. Anywhere in there is a good entry position on the daily. If we pull to the weekly, a little bit more specifically, if we zoom in, is probably going to be at about $14.70 or so. Now, that is you're going to say that's a decent range. I mean, how am I supposed to know? And again, between 1774 and 46 that we agreed on. It is important to keep in mind that everything is relative. And if we hide the drawings once again, we can see where the top of this big channel is, right? And the top of the big channel is the previous high, which was 37. Actually, the previous high was $40.65. So that is a huge potential to the upside. There is nothing wrong with scaling in now and then waiting for your second phase of scaling in. A lot of people like to scale in 2 or 3 phases. So getting just a little bit of skin in the game and then scaling in at this bounce right here, where if it goes like that and then goes back up to the channel, you can enter here. As this comes up, you bounce off, you enter there. And then if you have a third, sometimes people will enter a third time, and then you can scale out up there. All right, so that's what I got for you. It is Smith & Wesson, ticker SWBI. And we are still so far bullish on the S&P 500. I have heard of reports coming out recently that there was record closings on homes and record prices on homes, which is not good for the inflation, which will potentially force the Fed to continue their rate hike or keep it at where it is for longer, which will continue to put buying pressure, hurt buyers, I should say, because it makes it hard for them to finance, right? So that's all I got for you. This is the S&P 500 and Smith & Wesson. If you like this content, please just hit the like button. It's the easiest way to help out the channel. If you want to see more of this content, hit the subscription bell, hit the notification bell so you can see all of my latest content. Until then, we'll see you next time. Thanks.